Hey guys, Credible Crypto here with a new market video update. We're going to talk about Bitcoin in this video. We're also going to talk about Ethereum and a number of other alts. My last YouTube video was specifically on Ethereum, but the one before that covered Bitcoin and alts in general. And it's been about a month or so since that video, if not a little bit longer. And the reason that I didn't make an update sooner was because frankly, there wasn't too much to update. I have been, of course, covering lower time frame ideas on my X. If you haven't followed me there yet, please do so for shorter time frame ideas. But specifically with Bitcoin, we're starting to get some price action now that told me that, okay, maybe it was time to make another video and update us on what we saw last. Of course, we'll also cover Ethereum in depth, and I'll be covering a number of alts in this video, so stay tuned till the end to get updates across the board. Before we jump into the content, guys, a quick shout out to my partners that make this type of content possible. Check out WooX and WooFiPro if you guys are looking for an exchange to trade on. Again, WooX is a centralized exchange that they have, and WooFiPro is a decentralized exchange that offers perps. It looks exactly like a typical centralized exchange, except it is using your own wallet, so you don't need to send funds to another exchange for them to custody your assets. This is a self-custody solution using your own wallets. You can connect through Ethereum, through Solana, and a number of other chains. They have a number of perp products with leverage, essentially trying to mimic the centralized exchange experience. Pretty good liquidity as well for those who are trading in lower volumes. Again, me personally, I like to use a centralized exchange to this day because my size and the size of my positions is generally, I would say, on the larger side. But for those who are starting new accounts or want to experiment using an exchange but don't want to send their funds over to a centralized exchange, do check out WooFiPro. Again, if you use my link to sign up for this exchange, there's no KYC required for WooFiPro because it is a decentralized exchange. And if you do use my link to sign up, you are eligible to win the current giveaway that I'm hosting. Again, you can view that giveaway and the details of that on Twitter. Link for WooFiPro and for the giveaway will be posted in the video description below. Without further ado, guys, let's go ahead and jump in. This is Bitcoin, and a few days ago, I retweeted this tweet from April 23rd, about 2 weeks ago. Basically, is it finally time? Highlighting this post from January 22nd, which was a few months ago, in which I basically talked about the idea that I did not believe our cycle top was in. Now, this chart I shared a while ago and have reiterated in many of my recent videos that nothing has really changed. And the idea was simply that as long as you retrace no lower than the origin of the final fifth, which is at 58, 59K, everything below that is fair game. And what I expect to follow would be a very aggressive rise to the upside to essentially complete our parabolic blow off top final fifth wave to complete this cycle that has begun in 2018. This would be the longest Bitcoin cycle that we've seen so far, and it's a smaller cycle within a much larger cycle that I believe started at Bitcoin's inception. So this would essentially be the most aggressive move on Bitcoin that we've seen over the last 12 to 13 years, essentially since Bitcoin's inception. And at this point in time, we had a lot of people that believed that our top was put in here at about 103K. And so back when this chart was shared, I released a YouTube video. This chart is from that YouTube video. You can find the link on my Twitter on this tweet here from, again, January 22nd. But basically, the entire video that I recorded at the time, again, this was a few months ago, was to make the argument that a pullback into the low 70Ks was totally healthy, was totally normal, was not anything to be concerned about, and that I still believed the most aggressive rise was yet to come back to the upside. Basically, the argument was saying that I did not believe that we were seeing our cycle top. Again, this was at a time when many believed that we had topped and that we were heading down to 60K, 50K, 40K, etc. So if you want to see the argument for that in terms of the macro structure of Bitcoin, I recommend watching that YouTube video. That'll cover that in depth. Today, we're going to talk about the lower timeframes and how price action has developed since sharing this chart. So let's go ahead and take a look at price action today. All right, guys. So here is the chart of today's price action. And you can see that we did actually dip down to 74.5K. Once again, going back to the chart that I shared, we have that wave two going down. And in that post, or in that video, I should say, explain that the depth of this wave two is variable, right? So this is also why I wrote time and price not to scale, because we don't have to move up based on this time axis. More importantly, what I was trying to illustrate here was that we have a very strong impulsive move off of 58K. And so what follows, whatever the retracement is, as long as it stays above the origin of that impulse, the next move should also be impulsive. And so the depth of this wave two doesn't matter. It's a little bit variable, but obviously in follow-up posts and follow-up tweets, I did talk about this specific level here at 69 to 74K, which is essentially just this cluster of consolidation, or you can call it demand. And I said that this would be the most logical place to see a full-on reversal if we test it. Now, as you can see, we barely front ran that level, right? And so oftentimes when the markets are very bullish, instead of hitting the ideal level, we can sometimes front run it. That's exactly what seems to have happened here. In any case, our wave 2 now looks to be complete. And what we seem to be seeing off of these lows is a potential 5-wave impulse to the upside. On lower timeframes, we can actually see specifically the moves here. Very nice 5-wave subdivisions. I previously talked about this on Twitter as well, not too long ago. But we have some very nice 5-wave subdivisions, nice clean impulsive looking price action here. And so initially off the lows, it didn't look great because we had this kind of choppy move to the upside, but we started getting what looked to be impulsive price action here. And now it looks to have continued. So we very well may have just begun the start of that major third wave as depicted right here. And so again, what we're looking for is a full 5-wave move to the upside as such. And while we look to have completed our first wave, we're still missing the third and the major fifth. And again, this should take us, in my opinion, at least above 150K and possibly above 200K. We'll know more about that once this third wave completes. But what we're looking for now, guys, is we're looking for continuation of this impulsive price action, okay? And what this means is that if this is the start of this major third wave, I'm going to go ahead and just remove this real quick. Again, what we're looking for is another 5-wave kind of substructure within this wave 3. So again, let me go down to a smaller degree. Essentially, this third wave that we have should be made up of a smaller 5 waves, okay? So again, the idea is that in an uptrend, you have a series of higher highs and higher lows, and that creates what we call a 5-wave impulse. All that is to say is that we get moves up with the trend, we get pullbacks that correct the move up, and that is followed by another move up of the trend. When we have then a series of a higher high, a higher low, a higher high, a higher low, and a higher high, which is essentially a series or a multiple higher highs and higher lows in a row, that is considered an uptrend. And that is what makes an impulse. So again, don't get too confused by the nomenclature. A lot of people don't understand Elliott wave, and so they make fun of it. Guys, it's literally just analyzing market structure. An impulse is literally just a 5-wave move. We call it a 5-wave move because you need a series of higher highs and higher lows to form an uptrend. That's where we get 5 waves from. That's all it is an uptrend, right? So basically what we have here is we have an established low. We're now establishing a local high. We're then looking for a higher low followed by a higher high, and then we should be well on our way to trending back to the upside for the next leg above, ideally 150K. So as you can see, if this is the start of the next impulse, which it looks like it very well might be, we have potentially the first 5 waves up of this first subwave. Now, the second wave pullback, right, we can go back down to, sub 90K, but there's no guarantees. And oftentimes when we start to go parabolic like this, what we tend to get are kind of sideways corrections that don't really give much in the way of pullbacks before continuation. And that makes sense because if you're going parabolic, it's at a point where momentum is literally the strongest it has been in the uptrend. And you can actually see here, back here from the rally from 38K to 70K when we had that impulsive move, the wave 2 pullback was essentially like a sideways pullback. There wasn't much in terms of depth for the dip. And the wave 4 again was a very sideways pullback. So the same way that we saw a very aggressive expansion here, we're now expecting to see something similar for this parabolic, what should be a blow off top. And so if this is the start of that, then we aren't necessarily expecting very deep pullbacks. We could get very shallow pullbacks, sideways pullbacks as we continue to accelerate to the upside. Now, again, guys, I want to emphasize here, and I've said this in past videos as well, that the key here is that if you were not positioned in Bitcoin down here at 75K, right? Of course, ideally, the ideal place for us to reverse off of was this area of demand. But for whatever reason, if you were not positioned on Bitcoin here, it's really nothing to be concerned about. Even if you're still not positioned on Bitcoin, you have to keep in mind that upside on Bitcoin from current levels, again, if you agree with my ideas or not, if you don't agree with my ideas, you may not agree with this idea at all. But upside from Bitcoin from current levels may be about a 2 to 2.5x is my expectation. I don't think we're going to go above 300K on this rally for this cycle. I've put that as a maximum end of cycle target. I don't think it's going to happen. And I've explained why in the past. It's based on ROI from cycle to cycle. And there's not a whole lot to it. It's a very simple concept. And I'm not going to go over it again. But for those of you who've been following me for some time, you understand why this is a max. It's based on ROI levels. Again, you can compare ROI from bear market bottom to bear market top over the last 10, 15 years since inception, and you'll see that ROI tends to decrease just as the length of time from sub-cycle to sub-cycle tends to increase. I've talked about this, again, many times in the past, and so that gives us a maximum here based on ROI for this cycle that started in 2018 of no more than 300K. So again, that is my maximum, and I expect us to top somewhere between 150K and 300K. And so your upside on Bitcoin from this level is maybe 2.5x if we're very, very lucky, right? And I previously illustrated that upside on alts from current levels is going to be multiples of that. So again, the precursor to alts going crazy is Bitcoin breaking out of this correction that we've been in for months now, right? If Bitcoin rejects here and comes back down, then alts are obviously going to pull back as well. And if Bitcoin breaks out to the upside here and just keeps going up, you want to be focused on alts anyways. The fact that Bitcoin is running is just a precursor to alts running. And so based on simple ROI, if Bitcoin breaks out here and the whole market starts moving up, you're going to get a better return on alts. So long story short, don't be so concerned about getting an entry here on Bitcoin, in my opinion. Don't be so concerned about getting entry here on Bitcoin if we just keep going up. If we get a clean trade opportunity or some easy low time frame entry on Bitcoin, then you can take it. This would have been the best high time frame entry on Bitcoin. We just slightly front ran it by about $1,000. So in terms of a trade, you're just looking for low risk, high reward opportunities. And to be clear, like the level at which you enter a trade on Bitcoin or on any other coin for this matter doesn't matter. And what I mean by that is that if we were looking to get a long entry down here at 74K with a stop loss below the origin of the impulse, right? Because that's our high time frame invalidation. And let's say we were targeting 150K, okay, because that's the minimum target. That's a 5R trade, okay? Meaning if you risk $1,000 on this trade setup, you could make 5,000. Now, again, the reason why I say the price at which you enter a trade doesn't matter is because while this is a 5R trade with our level of invalidation, a high time frame trade, you can possibly find an entry. And I'm not saying that this is a trade to take. I'm just giving you an example. Based on lower time frame price action, if you find a trade entry, you can maybe identify a level of invalidation, a new one. Maybe this is our new level of invalidation at 93.4K. And maybe we see a trade entry here at 103K. And again, we're targeting that 150K. That's a 4.75R trade. Or maybe you're able to raise a stop loss a little bit. That's a 5R trade. It's the exact same trade setup with the exact same risk to reward as one in which you entered in at 74K, except now you're entering it at 103K. So when it comes to trading, your exact entry in terms of price doesn't matter. There's no reason to FOMO when you're a trader. If you're a spot holder, then you should be holding spot and you shouldn't be trading. And so if you're a spot holder, then ideally you've been exposed to Bitcoin since we said we're bullish down here at 15K. And ideally you're still holding Bitcoin or you've switched it for some alts like I have done because ROI on alts now far exceeds Bitcoin at these levels. But ideally, if you're a spot holder, you got in far lower, maybe at 15K, maybe at 24.5K when you identified, an invalidation at these lows and we said to be bullish here at 28. Maybe you got in at 50K, right? Whatever it may have been, you should already be exposed to the market from far, 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 far lower. And so you should not be feeling FOMO here. If you're feeling FOMO here to enter a trade, it makes no sense because again, when it comes to trading, it doesn't matter what price you enter at. All that matters is the trade setup and the risk reward that it offers, and you can get better risk reward opportunities from higher prices. It's not necessary that you must enter at a lower price to get the best risk to reward. For example, I may be able to identify a new entry. Let's say we pull back down to 99K, 98K. And I'm not saying this is an actual trade setup. So don't take this blindly thinking that I'm providing a trade here because I don't necessarily think this is a good trade op. But my point is if you can identify a lower time frame area of invalidation, you can possibly enter a trade such as this with a much better risk reward than one that you could have gotten in here at 74K. And so that's why there's really no reason to be FOMOing into Bitcoin at the moment. And I just wanted to preface this video with that because I think it's important to recognize that you need to, approach this calmly. We have plenty of opportunity here with Bitcoin breaking out. With that being said, guys, we've been expecting this move to the upside on the higher timeframes. And I have repeatedly emphasized that any dips down to mid 70Ks that are above 58K are nothing to be concerned about. And this is exactly why. We're now seeing a very strong move up off of the lows of 74K all the way to 104K. We look to be very close to breaking out here. If we get the breakout, then it's likely our major third wave to the upside has begun. Again, these final waves to the upside, this parabolic blow off top that we're expecting, the rate of ascent or like the amount of acceleration of the upside that we see should be more aggressive than anything that we've seen in the past. That is to say that if this is the start of this third leg to the upside, it will probably be the most aggressive rise that we've seen on Bitcoin, frankly, since inception, because what we're seeing here is essentially what would be a parabolic blow-off top of a cycle that started in 2018 down here at 3K. Okay, so with that being said, guys, let's go ahead and dive into some of the lower time frame price action here. Okay, obviously, we have a scenario which would be ideal. And that scenario is that, again, this is the first wave of 5 of this larger third. And this is the start of that impulsive move. The impulsive move in this case has already begun. Invalidation is the lows here at 74K, or you can even probably take, honestly, with what we should expect, as I mentioned, we shouldn't expect too deep of a pullback here, ideally. And we have a very clear impulsive move off of 84K. So ideally, you don't even see sub 84K. But in this bullish scenario, our impulse to the upside to 150K plus has begun. And of course, in this scenario, pretty much everything follows Bitcoin to the upside, okay? Just to cover our bases here and to make sure that we all understand, if this is not a breakout, and let's say we manage to get rejected here for whatever reason, then even if we pull back, and this is something that I want to keep emphasizing, no matter what happens here, guys, if we pull back, okay, and we see a deeper pullback. Now, a couple different ways that a pullback could happen. One could be we completed our first 5-wave move to the upside. We're getting that subwave 2 before the third subwave to the upside, right? Before the fourth and then the fifth of this larger third. Again, if in this scenario, right, the pullback should be relatively shallow. It may not even go as deep as, sub 90K, but in such a scenario, a pullback to this sort of gap that we have here, just under 91K would be fine, would be healthy, okay? But I want to emphasize that, let's say in the absolute worst case scenario, this is not the start of that impulsive move to the upside. Okay, let's just say that despite what it may seem, let's say that this is just a choppy move to the upside, okay? And we pull back deeper than expected, okay, down to these levels here again. What I really want to emphasize is that, guys, no matter what happens above 69 to 74K, it does not matter, okay? It does not matter. As long as 69 to 74K is held, nothing else matters. So we could fully retrace this technically and come back to these levels. It wouldn't matter, okay? All that implies is that this corrective move that we're seeing continues before the real ascent. Does not matter, okay? I'm not saying that I think that's likely to happen. I don't really see any particular red flags with this rally. We'll talk about that in a minute, looking at the data on the back end, but just want to get that out of the way. In the worst case scenario, if this were to happen, doesn't matter, okay? We did front run this zone, and that means that we may never test it, or we may not test it, and we may simply go parabolic from here. But I want to emphasize that if we do come back to test it, for whatever reason, it's not a cause for concern. You will get people that will say that because this rally failed and we fully retraced it, that this is super bearish and that this confirms the top is in. It doesn't do any such thing, guys. All it means is that we're still in a corrective structure and we're just going in for a test of massive support or demand, and the most likely place for a reversal here at 74K, okay, or 73K. So just keep that in mind, okay? With that out of the way, the ideal scenario is that the impulse has started, okay? And in that scenario, we may be seeing a pullback here. Again, it could be pretty sideways, maybe goes a little bit deeper, but this is kind of what I'll say is the primary scenario at the moment, okay? And so as we move on into the alt section, we talk about a number of alts, we're going to move on with the assumption that this impulse has begun. And we're going to move on with the assumption that we may potentially see a little bit of a pullback here before continuation up, or we may simply keep going up. But we're going to talk about alts in that context, okay? Because obviously in a scenario where Bitcoin pulls back down and retraces this whole move, alts will get hit a lot harder. And so all of our alt analysis, whether we like it or not, has to take Bitcoin price action and structure into consideration. We can't ignore Bitcoin when we're valuing alts because, like it or not, for the time being, Bitcoin decides generally the direction of the market for the most part. Before we jump into that, guys, quick announcement. Shout out to our week 5 winner for our $20,000 giveaway. We've now given away $5,000, guys, over the last month or so. We still have 2 more months of the giveaway left. We still have yet to give away another $10,000 in cash, 2 MacBook Pros, 2 MacBook Airs, an iPhone 16, and a number of other prizes, guys. If you haven't yet signed up, you can still sign up and you're still eligible to win for the next 2 months. And we're giving away $1,000 a week, and then the prizes ramp up towards the last 4 weeks. You still have the ability to win all of the prizes mentioned here, guys. But just shout out to the week 5 winner. Congrats on the win. And again, week 6 winner will be announced on May 13th, which is in about 5 days. I'm going to post a link to the giveaway in my video description. If those of you who haven't signed up, if you want to sign up, again, it doesn't require more than 10 minutes of your time. There's 4 ways that you can win. And 2 of the ways, they all require signing up on my partner exchanges. 2 of my exchanges don't require any KYC. One of them has 0 jurisdictional restrictions for the most part. So everyone should be eligible to enter if you want to. You can get more entries if you sign up for more of my partners, but people have already won with just a single entry. So don't miss out on that, guys. With that being said, let's go ahead and jump into our alts. So we're going to start off, guys, with Ethereum. I think Ethereum is the one that I have the most to talk about because we made a big long video on it last. And so I want to talk about what has developed on Ethereum since then. So without further ado, guys, let's jump into Ethereum. Beautiful move over the last 24 hours or so. Let's go ahead and talk about where we left off from the last YouTube video. So the last YouTube video, we were looking at the higher time frame chart. We were looking at a very key high time frame level, the green level here at 1870. And in that video, I said what we're looking for is ideally a 4 monthly close back above this level, right? Basically a high time frame close back above this level to keep things as bullish as they could possibly be. Now, leading up into the monthly close, you can see we closed just below it, okay? So I'm going to go ahead and zoom in on lower time frames, and you can actually see that leading up to the monthly close, we got very close to closing above. This was the monthly close, this red line, but we failed to do that by a few dollars, okay? Shortly after the monthly close, we've now broken back above the key high time frame level. But what I want to emphasize here is in the last YouTube video that I recorded on Ethereum, I talked about how this was a very key level, key area of interest. And in that video, I talked about a potential setup with an entry and a stop below the lows at 1500. And when I recorded that shortly after, we had a Bitcoin breakdown and I tweeted out this chart. Okay, so the one disadvantage to recording and making these YouTube videos for you guys is that this is crypto and price action changes very quickly. And unfortunately, because of the amount of time it takes to make these videos, I can't just pump them out every day. Price action changes drastically. And if I've just recorded a new YouTube video and I've published it and price action changes, I'll often then post shorter time frame updates on my Twitter, on my X. Again, if you aren't following me there, I recommend doing so. That way, in between my video updates, you guys can get updated on lower time frame ideas. And so this idea was shared shortly after posting my last YouTube video, right? And in that case, Ethereum was breaking down through our area of support. We had these next two key swing lows and this next area of interest that I call the wick zone below us. And I basically tweeted out, this is not the time to be panicking or selling spot holds that were bought for the end of the cycle. Even if this below scenario does play out, there are no guarantees that it must, but even if it does, the only two options in a situation like this is to consider buying more spot if we get the orange zone, or patiently wait for the reversal if you don't have more funds to deploy. We don't sell the dips, we buy them. So essentially, the idea was that I was expecting us to find support here in the green zone. We started melting through it as Bitcoin began breaking down. And so the next area of interest came into play. And I said, okay, we're breaking down lower than expected, but this is not a reason to panic. If anything, you should be buying the dips responsibly again, or simply waiting for the reversal because long-term, high time frame, nothing has really changed. And so shortly after that, we can now go on to the current chart and see that just like Bitcoin, okay, just like Bitcoin did, we just barely front ran that wick zone. You can see here that we came very close to tapping it and we're about $30 shy of hitting that wick zone and then we bounced, okay? And this is very similar to Bitcoin. With Bitcoin, of course, we came, I think, like a few $100 within our next area of demand and then we bounced. So both Bitcoin and Ethereum front ran those next key areas of interest, right? And then shortly after we had bounced, we then saw this impulsive looking move to the upside here. And then at that point, I tweeted again about the lower time frames. And I basically said that Ethereum is in a similar position where the move off of 1533, and that is this move here. I wrote potential origin of impulse. This move off of this low does look impulsive, right? So we're at supply, but if Bitcoin breaks out, Ethereum should as well. In that case, we would not expect to see below 1500 again. Okay, for this most bullish scenario, we'll get further confirmation on a monthly close above our key level at 1870. If we pull back, dips into green, would offer the best risk reward opportunity if the bottom is indeed already in. Okay, so in this case, basically once we printed this lower time frame impulse, again, this is the level mentioned in that chart. We were trading here at D3 supply, and I mentioned that we may not see sub 1500 again if Bitcoin breaks out from here. We then continue to chop. We just failed to get the high time frame close just by less than a day. Less than a day we would have gotten it, but just failed to get it. And then Bitcoin is now broken out and Ethereum has as well. So it does look like Ethereum is also well on its way. And this is exactly why I said that even though we were breaking down lower than expected, it was not a time to panic or to sell. And your only two options in my eyes were to buy more or simply wait for this reversal that we've now seen. So this is exactly why it pays not to panic. If you would have asked people on Twitter a couple of weeks ago about Ethereum, most people said that it was dead, that it was a failure, and that it would never rise again. People are getting insanely bearish on Ethereum, just like I talked about in my last YouTube video. People basically saying that Ethereum was dead. And now today, because of this rally that we've seen, the sentiment has shifted. People now think that it's back. Of course, there was a big software upgrade or whatever to Ethereum as well that was pushed through. And so that is now a new narrative to suggest that price should continue to rise. But essentially, guys, the point being that you can't give in to the sentiment online because typically when we're at price lows, it's very, very bearish. And then when we're at highs, it's very, very bullish. And people typically don't have the foresight, at least the masses don't have the foresight to understand that when prices are low, it's a time to be buying. And when prices are high, it's time to be selling. Instead, they think when prices are low, it implies that the asset is dead or is no longer worth looking at. And when prices is high, now they want to buy it. So we're seeing the same thing again. We're starting to see sentiment shift with this rise, but nothing has really changed from our perspective on the high time frames. Ethereum looks to possibly have reversed off of these lows, front running our wick zone, just like Bitcoin front running its own area of demand. And this is a very nice move to the upside, okay? Now, again, as I said, with all the alts that we're talking about here, we're working under the assumption that Bitcoin has begun its major impulse and that we're not going to see a very deep pullback. If Bitcoin pulls back deeper, also pull back deeper. And again, just like I said with Bitcoin, if for whatever reason this rally fails and we retrace back down, if that happens, okay, and somehow we push lower and we push into the wick zone, nothing has changed. This would just be us testing that next logical area of support that has been on our radar, and we have left back behind these untapped lows. Doesn't mean that they have to get grabbed, but again, all I'm trying to say here is if Bitcoin does pull back harder than expected, Ethereum might pull back hard, and if it does, this would be just another opportunity. So, prefacing our talk about Ethereum with the idea that, again, we're not expecting a massive pullback from Bitcoin, but if we get one deeper than expected and Ethereum does the same, this is not a cause for concern. You're going to see people, again, if this happens, start screaming that Ethereum is dead, that this rally failed like all the rest, and that it's going to continue plummeting down to $700, $800, et cetera, et cetera. That's not what this would be. Again, we did close that high time frame close below our key level. We missed it by a few dollars, which is unfortunate. But this next candle will take 4 months to close. So we can't wait and see if the next candle will reclaim this level, because by that time we could be at new highs, right? 4 months, a lot can happen in 4 months. So it would have been nice to see it close above this high time frame level. We closed below it, but it doesn't mean that we can't reclaim it in the next candle. And again, we can't wait to see that. So this level in terms of like reliance on the high time frames, a little bit less reliable here now. But I will say that you can see here as well, and I'll add this line as well, that we also have this key level. That's another high time frame open and close. And you can see here that in this case, we closed above this level here at 1645, which is probably the next most significant level after this one. And so a reclaim could be in the cards for the next candle. We tested this area of support after losing this one. We held it, and now we may close back above. And again, if that happens, we'll know far before this candle closes. Point is that if we do happen to come down to this wick zone for whatever reason and bounce off of it, it's not a cause for concern. And all that could mean is that we are testing deeper after failing to close the high time frame above 1860. We're testing the wick zone before the real reversal of the upside, okay? In situations like this, guys, and I'll emphasize this, where we have, potential or something like this to happen just because of these lows that we've left behind and the idea that Bitcoin may pull back from here. If Bitcoin were to pull back like into the sub 90Ks, that would be a 12% move down on Bitcoin, but on something like Ethereum, let's take a look at the Ethereum Bitcoin pairing. If this was a deviation of the Ethereum Bitcoin pairing, and this ends up being a deviation of the highs, and basically we get a pullback on Bitcoin and Ethereum shows a little bit more weakness and maybe falls back inside the range or potentially goes for the lows again, such a weakness on Ethereum would translate to potentially a move back down into the wick zone, okay? So this is all to say that this sort of opportunity is not guaranteed, obviously. I don't even want to say that it's my primary. I'm just saying that if it happens, don't be afraid and it's an opportunity. I wouldn't bet on it, meaning I'm not shorting Ethereum here, trying to short this potential last leg that may never come down. It doesn't make any sense. All I'm saying here is in the same way that when we broke down, we said you have two options, either buy more or wait. The same option is here. You're not shorting. That's not an option in my eyes from these levels, because even if we do get this downside, it's minimal before the big rally. All you're doing is, if we get this opportunity, you're keeping it in mind as a possibility so you can then have the confidence to potentially buy more here if we get it, okay? If you can't afford to buy more, don't buy more, period. But if you can safely afford to buy more if we get this opportunity, it's one to take. It's not one to be fearful about if we retrace this move, okay? That's the only reason I'm covering this scenario, is because I want to emphasize, if we get it for whatever reason, being fearful is the last thing. You should be greedy down here, not fearful, okay? With that being said, obviously not financial advice. Do what makes sense to you, but just want to get that out of the way. Now, assuming that we don't get such a pullback, and assuming that this is a breakout on Bitcoin and we get a sideways correction on Bitcoin and therefore a sideways correction on Ethereum and continuation up, this D3 supply, this red zone here that we've now flipped, should act as support, okay? So what we'd expect in such a scenario is potentially a little range to form here, or if we're very bullish, just some sideways consolidation here before we continue to rip to the upside. And you may have seen before I hit it earlier in the video, I had this range mapped out. I like this range. You can see a key swing high with all this consolidation before the aggressive sell-off, bounce here, consolidation in the mid-range, and then a breakdown. And you can see that we're now trading just above these local range lows. So in a very, very bullish scenario, we just kind of consolidate here, reestablishing this range low as support, and then we rip through all the way to the other side of the range here at 3,400. Again, we have been expecting, guys, this is not a surprise, outperformance of Ethereum against Bitcoin for some time now. Again, we were bearish on the Ethereum Bitcoin pairing for 2 years, guys, when most were very bullish on it. We were bearish on it. And as I said, we've now approached a region on the high time frame where it makes sense to consider a higher low forming here to complete what would be just like a massive triple tap, right? So it makes sense to consider a potential higher low forming here. And if that's the case, then this would be the start of Ethereum outperformance against Bitcoin for the first time in over 2 years, okay? And again, in my opinion, it's not a matter of if, but a matter of when. One easy way to look at this, guys, is I get a lot of people that say, why should alts outperform Bitcoin? That makes no sense. I think anyone who is familiar with investing understands that the way that investing works in terms of risk to reward is that the safest bets in the world tend to yield less ROI because all your returns on investments are generally based on the level of risk that you're taking, right? Higher risk investments tend to yield higher reward because fewer people are willing to take them. Lower risk investments tend to yield a lower reward because most people are willing to take those lower risk investments. And because most people are willing to take them, you're not going to get the best opportunities in these safer bets, right? And you can look at Bitcoin and altcoins in the same regard. Of course, Bitcoin will outperform most alts that are like junk, right? Alts that are really just jokes or here for one cycle and gone the next, or don't have any actual value or any reason to be sustained or have no usage or no fundamental backing. Those alts, Bitcoin will obviously outperform them simply because it'll survive and they won't. But for other alts that actually have actual use and utility and function and a fundamental value, because they are smaller market cap, higher beta to Bitcoin, you expect them to outperform. It's not normal or natural to expect Bitcoin to continue to outperform against those alts, the ones that are actually going to survive for the next decade or so. It's just logical that Bitcoin, being the king, the leader, the highest market cap, the safest asset, it should be expected to yield the lowest relative reward. And that's just basic investment 101. So for those that say, why would Ethereum ever outperform Bitcoin? I mean, unless you think Ethereum is going to die and vanish, it should outperform Bitcoin like most alts because it is a higher risk bet. And so this trend of a downward bleeding Ethereum Bitcoin, as I've said for years now, I think is going to come to an end at some point. I think we're approaching that point now. And when it does come to an end, we see a reversal. I do think that we'll see new all-time highs on this chart. And so again, we're down here, and for us to make a higher low here, we're reaching a point where we need to start looking for a reversal because this was the last major low. At any lower, we're going to break down and make a lower low. And if that happens, then the next area of interest is what you can kind of call like a wick zone. I'd call this like the wick zone of the Ethereum Bitcoin chart in the high time frame, right? And so if we fail to reverse where we are now, or very, very soon at least, then we make a lower low here. And that just means that we could fall further down to this next area of demand. And this sort of scenario, I think, would happen in a situation in which Bitcoin is going parabolic. And again, we know we're expecting Bitcoin to go parabolic here soon. So it's not something that I'd necessarily rule out completely. We may see some relief here against this pairing, and then it's possible that we see this move down. Again, it's not something that I would necessarily bet on. It's just something that I want you guys to be aware of in case we get it. It does not mean that Ethereum is dead. Okay, it does not mean that Ethereum is not going to reverse. It simply means that Bitcoin will continue to outperform a little bit longer before that eventual reversal. And again, that can be brought on by a parabolic advance on Bitcoin, okay? We know that a final third, fourth, and fifth wave move here to the upside should be more aggressive than anything that we've seen thus far. And such a move could take the spotlight away from alts in the immediate short term and lead to a final spike in Bitcoin dominance before Bitcoin tops and alts go berserk, right? So that scenario is one in which if Bitcoin just continues to rip here, most all Bitcoin pairings will bleed. And in that case, the Ethereum Bitcoin bottom may not be in. And in that case, you may see a little bit lower. But with that being said, guys, if Bitcoin does just rip here, even if the Ethereum Bitcoin pairing does bleed a bit, the Ethereum USD pairing should not come down to the wick zone here. Ethereum Bitcoin moving down to the wick zone here only comes into play if Bitcoin pulls back from current levels down to maybe sub 90K, or potentially lower than that. If we see something like this happen, that opens up the doors for something like this to happen. But if Bitcoin just consolidates here and goes sideways and continues to rip, then we can kiss sub 1500 Ethereum goodbye. And in that case, Ethereum is probably more likely to follow this scenario where we simply consolidate above the red zone, which I'm going to just change to green now because we've closed above it. This is now where we'd expect to stay above unless Bitcoin gets a deeper pullback. And again, that can manifest on Ethereum with us holding these range lows and reclaiming them, chopping about, and then erupting as picture. That'd be the most bullish scenario. Or maybe we get a little bit of a pullback, allowing us to go down to retest this flip supply and then erupt. Either way, guys, this is when we start to see some potential outperformance on Ethereum in the short term. Ethereum would then move up for this impulsive move of its own. We'd be targeting the range highs and then further consolidation before continued expansion. That is Ethereum. I've covered the bullish and the bearish scenarios here on Ethereum, but everything's looking pretty damn good here on Ethereum. Let's go ahead and now move on to XRP. So XRP, guys, moving back to the last video update we did on it, I talked about how we had our best risk reward for longs. Here at 160, we tapped that level beautifully, popped up, and we've kind of been chopping around since then, okay? And I recently shared a chart on Twitter depicting a potential triple tap here. Again, we've seen this sort of setup play out a lot, and I said if we can get this, this would be great. We're not really seeing aggressive momentum here. We're kind of chopping about. So if we get a pullback on Bitcoin, then we get a pullback across the board, and then that would hopefully give us another chance to enter a trade here on XRP. Again, I've said many times that this is the best area for buying spot on XRP. It's the best area for a high time frame long on XRP. So if you manage to get in here, you're just chilling. There's nothing you really need to do. If we get a pullback across the board on Bitcoin down to sub 90K again, then we may see another potential opportunity to enter a trade here on XRP. And that is one that you can take if you, for whatever reason, missed the best ideal entry, okay? We don't need to get this. And again, if Bitcoin doesn't pull back and just continues to accelerate from 103K and doesn't see sub 90K again, the chances of us getting this are slim to none, okay? This only happens on a pullback across the board, which I've previously mentioned. But what I really want to highlight here and what I think is very interesting is XRP Ethereum is now kind of moving kind of similar to what I talked about in the last YouTube video. I talked about how XRP against Ethereum has been in this larger structure, right? We were bullish on this chart down here, 200% below. We called for a rally to the highs of this range, some 200% higher. We tagged the highs of this range, and then I said it would not surprise me if we get a pullback from these highs, okay? And that would mean, again, a little bit of outperformance on Ethereum. And this is, again, what my last YouTube video was about, Ethereum outperforming against XRP, sending this pairing down. And so Ethereum did fall lower than expected, but it's now outperforming to the upside. And so what we're now getting is that exact move on XRP Ethereum that we talked about in my last YouTube video. And what I want to highlight here is that as XRP Ethereum approaches these areas in green, that's where we may see XRP kick into gear, okay? So again, XRP is one of the very few alts in this space, aside from, I guess, alts, yeah, because Bitcoin is not an alt. So XRP is one of the few, if not the only alts, except, like alts that has printed a very clean impulsive move off of the bottom here at 48 cents, 1, 2, 3, 4, 5, and is now consolidating in a larger wave 2. Again, structurally, this is similar to Bitcoin at 15K. This was the first impulse on Bitcoin. We got the wave 2, then the third impulse, the wave 4, then the fifth impulse that we're now working on. That's where XRP is now. Just that 15K move to 30K, that's where we are on XRP now. The 15K move is the same as XRP off of 40 cents. The 30K move to 30K is the same as XRP hitting 280. And we're now seeing the consolidation at like 22K Bitcoin that we saw in 22K Bitcoin before Bitcoin erupted to 60K. That's what we're seeing here on XRP. So you can't even say that Ethereum has a very clean impulse off of the lows because the move that we had up here was quite corrective and then we melted down. And now we could be starting that impulse, that first major impulse off of these lows. But XRP is one of the only coins that off of its major low, like even this move here, it looks pretty choppy, right? And that could be why we haven't really seen aggressive moves on Ethereum for a number of years now, because we're not really seeing impulsive price action. Since essentially like 2021, you can view Ethereum just being in like a giant range, right? This isn't really impulsive price action. It's a giant, massive range, which is why Ethereum has been so sluggish over the last few years versus one coin that has actually printed an impulsive move off of the low here at 48 cents on a large high time frame scale, right? Like I said, I expect XRP to continue to outperform in the mid to long term versus Bitcoin and versus Ethereum. But in the immediate short term, we hit this area on the XRP Ethereum chart on the high time frames that suggested we may get a pullback, and that's what we're getting now. So these green zones are basically my areas to watch for XRP USD to again start to kick off that next leg to new all-time highs. So when we hit this level here, it indicates that XRP could start outperforming against Ethereum. And again, if Ethereum is bullish, then this could signal XRP starting the next impulse. If we break down from this first area of support, our next area of support is going to be this green area, which if I just zoom out a bit, you can see is kind of the mid-range of the much larger range that we're in here. So again, acted as resistance, broke through, went all the way to the range highs, rejected, now coming back down. So if Ethereum pumps really hard and XRP continues to be a little bit sluggish, then we could bleed down to this zone here. But at one of these 2 points, I'm looking for a confluent structure on the USD chart to signal the next impulse beginning on XRP. And again, that will take us to $4 to $5 easily, right? In a perfect world, we get a pullback on Bitcoin across the board, basically, and we see a little bit of weakness on XRP down into the range lows where we find support, and then we see our impulse off of this level. But again, in the situation in which Bitcoin does not pull back more than 10% and just continues to run higher and drag everything with it, we may simply go up as such and just continue up to these range highs on XRP without getting that second entry opportunity. The first one obviously was down here. The second one, if we get it, will be right here. We may or may not get it, but that's what I'll be looking at on XRP in the situation in which we get a market-wide pullback. You can see that despite Bitcoin having pumped very aggressively off of this level, XRP hasn't really done much. We've just moved back up to these local highs. And so there's still a chance that we can get this zone if we get a pullback on Bitcoin now. And it wouldn't need to be anything crazy either. Bitcoin could pull back down to just under these lows that we have, which would be relatively healthy. And that could be enough to get us this entry on XRP, okay? So again, like our entry for Ethereum, like our ideas on Bitcoin, your options here, this is not something that I'm looking to short. I'm not looking to short this move that may never come. I'm simply mapping it out so that if we get a pullback, I can potentially long this area or add on to my positions. Again, we continue to hold spot XRP from sub 50 cents until double digits. We're not selling spot XRP till it's above 10 bucks. But for a trade, this is the next trade setup that I'm eyeing up if you fail to enter in a higher time frame position down here, which I did. I did not manage to get filled here. I missed the fill by a few cents. I think I had my fill or my limit orders down here at 154. We hit 161. I didn't get filled. We went up. So my next area of interest for a long setup on XRP is going to be this region right here if we get it. Okay, if we don't, we ride spot to new all-time highs. If we do, we take advantage for another potential trade opportunity. With that being said, guys, that is XRP. I'm also going to be looking at this chart for confluence. These are my areas of interest on the XRP chart. If we land in one of these zones at the same time that XRP USD lands at our range lows, that is a type of confluence that I look for to enter a high conviction long setup. Okay, that's the way that I use these charts together. That's XRP, guys. Let's go ahead and move on to CRV. CRV, guys, obviously a very popular one and for good reason. One of my favorite coins in the space, hands down. We're just going to talk about, again, CRV, high time frame. We formed a triple tap off the lows here at 40 cents. We're now seeing acceleration of the upside. I do believe, and I have high conviction, that our bottom is in here at 40 cents. In terms of retracement, we hit the blue area of demand that I've been talking about for a while now. We formed a clean triple tap. We're now moving to the range highs. I do think our bottom was in here. I've previously talked about on Twitter how we do have this untapped weekly level on the CRV Bitcoin chart, and that this was my only hesitation towards us potentially seeing a little bit of a deeper pullback on CRV because we did not tap this weekly demand zone, right? Now, we don't have to tap it, okay? We just front ran it like we front ran Bitcoin lows of 69 to 74K, like we front ran Ethereum wick zone at 1300. We also front ran this area of demand here that I would have liked to have seen tapped, okay? And so because we front ran it, it doesn't mean that we must get it. We could certainly just continue to go up without tapping it. But I always like to say, imagine this as like an open door. And I like to ideally move up after we've closed all our doors behind us so that we don't have to worry about falling back. And when we leave those doors open, it always means that maybe we could return later on in the future to close the door. Okay, just think of it that way. The door doesn't need to be closed, but if the door is open, it can be closed later on. If it's already closed, we can continue moving up without worrying about it. But if it hasn't been closed, that idea is always there that maybe we're going to come back for it, okay? Again, this is a CRV Bitcoin pairing. So a move down to this zone doesn't mean a big bleed on CRV USD. We could get this sort of a retracement, a 40% retracement, if Bitcoin just starts going parabolic and CRV initially doesn't move with it. CRV could literally stay at 75 cents. And if Bitcoin goes up 30 to 40%, I don't know what the math is exactly, then this pairing could bleed 30 to 40% to the downside with CRV not budging on the USDT pairing, okay? This is all to just say that a move down of this magnitude on the CRV Bitcoin pairing is not the same as a move down of 30 to 40% on the USD pairing. That's not how it works. This could happen with us essentially holding support where we are now, in the high 70s. So with that being said, guys, I want to talk about potential areas to buy the dip on CRV if we get it, okay? Keep in mind, CRV is technically at resistance right now on the USD pairing. We haven't yet broken out on the USD pairing. And again, with potential for a Bitcoin pullback of 10% or more, maybe down to sub 90K, if that happens, where would we be looking to buy the dip on CRV, okay? Obviously, we should already be very heavy on spot. We've had plenty of opportunities to load up on spot CRV in the 30-cent region, in the 40-cent region, in the 50-cent region, in the 60-cent region. We're here now almost at 80 cents. So the way I approach this is, again, if you're not fully allocated to CRV and you're looking to buy, where would you be looking to buy, okay? Best not to FOMO into resistance. This is not the place to be shorting. I'm not suggesting shorting. I'm simply saying, where should you be looking if you're one of the people who, for whatever reason, is not on board yet and is looking to buy CRV? I think, personally, that the best opportunity that we could possibly get, okay, on a bigger pullback across the board, on any pullback across the board, would be a move down into this green zone here, okay? That, I think, is the best that we can hope for at this point, because I do think that the bottom is in here, okay? I know that we're at resistance, so there's a chance that we pull back if the whole market does. And if we get such a pullback, I would be looking at potentially a move down to clean up these built-up lows, okay, into what is essentially a higher time frame area of demand here between 40 to 57 cents, okay? So that is where I would be looking to potentially buy the dip if an opportunity provides. Yeah, essentially what I have here, the reason that I marked this off is because we have some lows here. We have a move down that tapped our range lows, that gave us that triple tap, and then we moved up from there. So the down move that preceded the bottom and the breakout is what we consider an area of demand or an area of interest. So that would be this entire green region. And then you can see here that we have like a series of like higher lows, right? So potential stop losses resting below this region. So if Bitcoin pulls back, then potentially a dip into this area of demand, clearing up these lows, stopping out these individuals, and then reversing to the upside. And so that is where I would look to set bids, stink bids, in case we get a pullback across the board somewhere below 55 cents, and I'd ladder them down into the green zone. That, I think, is the best that we could hope for in terms of a pullback. Again, this assumes that we're not just going to continue to rip from here and break out. If Bitcoin continues to rip from 103K and doesn't pull back into sub 90Ks, then it's quite likely that CRV will rip out here as well, and we will not get this opportunity. But for those who are looking for an opportunity, this is the one to take if we get it, in my opinion. Now, going to the CRV Bitcoin chart, there's a couple of things that I'm looking at here, which I want to kind of highlight, okay? In a situation where we are going to end up in this green zone down here, that means that Bitcoin is essentially going parabolic, okay? And that means that CRV is stalling out a little bit while Bitcoin goes parabolic, which is not anything to be concerned about. When Bitcoin starts ripping up and starts moving up $10,000 in a day, it tends to take attention off of alts a little bit. But in the lower time frames, there's two key levels I'm looking at here on CRV Bitcoin. And let's go ahead and we'll go down to like the 6-hour chart. And I want to kind of show you where I get these ideas or these levels from. The first red line, these two red lines are what I want you guys to focus on, okay? The green zone out here, and then the two red lines are lower time frames. This is a high time frame level. These are low time frame levels. On the low time frame, we have this sell-off that started with this local high. That's the level that I have marked off here. You can consider that a range high. You can consider this a range low. So what we have right now is a move between the range highs and the range lows. We haven't taken the highs. We haven't taken the lows, okay? I'm going to go ahead and just add an X here just to make you guys kind of understand what I'm looking at in terms of a range, okay? We're grinding up. We've been chopping between right underneath this range high for some time now, okay? We also have a little local area of demand, another low time frame level here. That's an area that I could expect to bounce from, okay? So what I'm looking for now in terms of price action is potentially a bounce here and then a move up, okay? Or potentially a move up here to take these highs and then a move down here and then a potential reversal, okay? A few different scenarios that can play out, but essentially I think that we're going to ping pong between the local range highs and this area of demand. And so this gets a little bit confusing, but essentially depending on where we are when we get to these levels, we're going to look for confluence on the USDT pairing for potential long opportunity, et cetera, like we talked about previously. So let's say Bitcoin now begins pulling back from 103K down to, 90K, like we talked about, okay? Then it's possible that we see some weakness here and we dip into this zone. If we dip into this zone when CRV is approaching our green zone here, then again, we have higher confluence for a long entry on CRV or to add to our positions on CRV here in the 50 cent region, because we have support then on the USDT pairing and support then on the Bitcoin pairing, okay? So then we could see something like this. If instead we get a move to the highs here before Bitcoin pulls back, and then we get a Bitcoin pullback, then what that could translate to on the USDT pairing is a move above these range highs, a kind of grind up into the red or above these range highs, and then a potential pullback like this, and then a very aggressive move to the upside. And again, I highlighted this on Twitter as well, right here on this chart, and I basically said this would require a pullback on BTC to get it, but something like this would be very healthy and a great chance to top off bags if we get it. This is the same idea, right? This red zone here, I've made it a more generalized, larger red zone between 66 to 84 cents. This is the area that we're currently in right now, between 66 to 84 cents. Again, this image that I've shown you here is exactly the same as what I showed you guys here. And so we can further tighten this green zone to this little 2-day breaker, right? So this is exactly the same idea depicted here. And so if we get that, fantastic area to add to your positions, in my opinion. But again, would require, like I said, a Bitcoin pullback, which we haven't gotten yet. Bitcoin has continued to climb to 100 and 203K. But this idea is still on the table. Until we've broken out, cleared these range highs, until we've successfully done that, we have to be aware of a possibility of a pullback in case Bitcoin does pull back. So Bitcoin continues to sit here at 102K. We'll have to see how things develop, okay? I think that pretty much covers it for CRV. So now we're going to move on to the next alt. This one's going to be CVX. I've had a lot of requests for CVX, and typically the only reason I haven't been covering it in recent videos is because there hasn't been much to update, and it's typically just going to follow CRV anyways. But structurally, it's not as clean as CRV. We didn't get like a clean triple tap off of the lows like we did on CRV. It just looks a little bit more sluggish. I've had this chart mapped off on CVX for some time now, and basically I've been looking at a similar range here on CVX, and I've been targeting the range highs. We've now hit the range highs. And so this is, again, a point at which, now that we've tagged the range highs, we may see a pullback, okay? And again, you probably are now realizing that this is all a bunch of confluence, like with Bitcoin. Like if Bitcoin pulls back, then of course we see a pullback across the board. On something like CVX, where we hit the range highs, now it's even more likely that CVX pulls back along with Bitcoin because we're at a logical area of resistance. So this is how you kind of have to take Bitcoin into context with everything. Now, if Bitcoin just continues to rip, then there's a chance that CVX doesn't pull back, right? This is CVX, and now that we've hit these local range highs, it's possible that we pull back. We can zoom out to the higher time frames to see if we see like any logical areas of support on the downside to where we may get a pullback. And I'm just looking at this, and nothing really jumps out at me in terms of areas for a dip. The only thing I would say is that, like CRV, we do have a little buildup of higher lows here that we could look at a potential sweep of. Actually, this looks pretty clean. This consolidation cluster will make it orange before the breakout to the upside that went to range highs, right? So we've left behind these local higher lows. And so this is often where liquidity is resting, meaning if you've entered a long on CVX somewhere here, you're likely putting your stop losses below either of these local lows. And so if we do get a pullback, again, similar to CRV, actually, now that I look at it, we would be lucky to get a pullback below those lows into local demand for reversal. So again, for CVX, the time to be a buyer, in my opinion, to buy spot would be under 250 if we get it into this little area in orange. This actually lines up with what will probably be the mid-range. Yeah, the mid-range of this range is right below these slightly higher lows. So again, logical place to see a pullback is the mid-range. So we'd look for a pullback into the mid-range, act as support here, and then reversal to the upside. So if I were looking to buy more CVX or add to my position, I would do it here under 250. Okay, other than that, CVX looks fine. If we get a pullback here, and then continue to follow CRV. I will say for CVX, it's one of those coins where you guys might remember earlier in the year, it was outperforming against CRV, and everyone was saying, when is CRV going to move? Because CVX was pumping and CRV wasn't. And then we went through a period of time where now we're seeing CRV pumping and CVX isn't following. And you keep getting people that are trying to go back and forth, or people that are wondering why one or the other isn't pumping. And that's why I say just hold both if you're bullish. Honestly, they're kind of the same, because the reason I'm so bullish on CVX is because it controls over 50% of locked CRV. And if you understand CRV and what makes it bullish, then you'll understand why that is bullish in and of itself. And if you haven't done that yet or don't understand it yet, I did make a YouTube video explaining that about 3 years ago. It's still here on my YouTube. Go watch that. It's 3 years old now, but the fundamental analysis behind those ideas hasn't changed, and fundamentals have simply gotten stronger. And so everything that was said that has only gotten more strong, and the price has gotten lower. So even more of an opportunity than it was back then. But the flywheel that I described in that video remains the same, obviously. CVX controls a big share of locked CRV, which means that CVX then controls a big share of voting power in the CRV protocol. I think it's almost 50% of all the voting power, which is huge. CVX not only controls voting power in CRV, but it controls voting power in 3 other protocols. CVX is almost like an index fund of a lot of these DeFi protocols, with CRV being the biggest chunk in that index fund. So that's why I just say, it's probably going to follow CRV. There's times where CVX will randomly start to outperform. So don't count it out because it's sluggish right now. Unlike CRV, most of CVX's emissions are now complete. So there's lower inflation on CVX than there's on CRV. And so it's a little bit more illiquid than CRV2. So when CVX does begin to pump, it does so at times very, very aggressively. And so don't count it out just because it's sluggish now. That can change overnight. So with that being said, there's CVX, guys, looking really good. That's my area of interest for buys. We covered Bitcoin, we covered XRP, we covered Ethereum, we covered CRV, and we covered CVX. I think that's going to wrap it up for this video because I went into a little bit more depth on a lot of these coins that I planned, and it got a little bit long. So we'll wrap it up here, guys. If you enjoyed this video, please like, share, and subscribe, and I will catch you guys in the next one.